Hi, everybody. Thanks for joining me. Before we get started, I'd like to ask you to hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. All right. Obviously, nobody can tell you for sure what are going to be the large trillion-dollar companies of tomorrow. Even the companies that are trillion-dollar companies today, there's no guarantee that they're going to stay that way. So there are a few things I like to look for. Great management's one. Just a history of shareholder-friendly decisions is another, and above all, a big market opportunity and preferably a leading position in that market. So with that said, there are five companies in particular that are not trillion-dollar companies today, not even close in a few cases, that I think do have this potential over the long term. So number one is a company called Shopify. Now, this is a company that's really fallen out of favor recently. Shopify, as I'm talking, is about 80% off of its all time high, and that's after a recent rebound. It currently has a market cap of just under $50 billion. So that means it would have to increase roughly 20 times its current size in order to achieve a $1 trillion market cap. Now, Shopify is a company that's been building an ecosystem for companies of all sizes to sell their products online. One of the best things about Shopify is it's built to grow with its companies. Some companies have been with Shopify since their first online sales and have grown to the point where they're now publicly traded companies. Uniform company Figs is a good example of that. So right now, this is what kind of a tailwind that could keep Shopify growing. Only about 15% of U.S. retail sales are through e-commerce today. So there's a lot of room for this business to grow. As it keeps adding features and services, its revenue per customer should continue to increase, and that's even more so when you think about how it's built to grow along with the businesses that use its platform. So Shopify is one of my favorite, $1 trillion candidates over the long term. Number two, and this one's a little bit closer today. This is Disney. Disney has a market cap of about $175 billion. So if it increased to about six times its current size or current market value, it would reach the $1 trillion status. And I think it will do that sooner rather than later. I think within the next decade, Disney is going to be a $1 trillion company. Of course, just my prediction. I don't have a crystal ball or anything like that. But Disney has incredible pricing power, incredible demand, and a wide range of intellectual property that should keep its business growing for years to come. The streaming business is kind of the point that most analysts are down on right now because it is losing money and it's unclear how profitable it will be in the future. I think they're underestimating that pricing power factor. For example, Disney Plus is rolling out a ad-based tier. It's not a cheaper ad-based tier. They're going to keep their $7.99 monthly price for the ad-based version and charge a higher price for people who don't want ads. So big revenue drivers there. Box office is really just picking up. It's not back to pre-COVID levels yet, but we're starting to see some big releases come out, and I think this will start to be reflected in the numbers soon. I think streaming and entertainment are a big undervalued part of Disney's business, and that its core businesses like the theme parks and cruise line and things like that are going to keep growing for years to come. Number three is PayPal. PayPal is a little over $100 billion right now. It's down big from the highs. PayPal at one point was about a $300 billion company, but growth has slowed down. The company has essentially conceded that it's not going to hit its original growth targets. Originally, PayPal had said it wanted, 750 million users. That would be a big, big jump from its current user base within a few years. It's pretty much conceded it's not going to get there. However, there's a lot of room to monetize its current business, and it can grow, but maybe at a kind of slower rate than they thought it would. But the monetization is a big part of it. Venmo, they've barely even begun to monetize Venmo, for example. A lot of room to grow here. And once PayPal figures out the direction of its business, which right now I think it's in kind of a transition to from growth to value, similar to how Apple was, 7 or 8 years ago. They were in kind of a rapid growth phase, and then they kind of figured out where their business was going to go long term, and we all see the results in Apple's earnings. Not that PayPal is necessarily going to be the next Apple, but I think it does have trillion-dollar potential over the long run. 4 is MercadoLibre. This is one of my biggest stock holdings personally. Current market value is just under $50 billion. MercadoLibre is often called the Amazon of Latin America, and for good reason. It is the biggest e-commerce player in markets like Brazil, Argentina, Mexico, but there's a lot more to the business. You could also call MercadoLibre the PayPal or Square of Latin America. It has a Mercado Pago payments platform that actually it processes over $100 billion of annualized payment volume. It's growing very fast. It's probably the most exciting part of the business right now. The company also has a shipping platform. It has a lending platform. There are a bunch of other directions it can take it. It really is building a whole ecosystem for e-commerce in the payment side, the merchandise side, the logistics side, and there's a lot of room to grow. A lot of Latin American markets are still in the earlier days of e-commerce adoption, of cashless payments, things like that. So the stock is down by about 50% from the highs, and I think it has massive potential over the long term. I think eventually this could have the same market cap as Amazon if things go well. Not going to happen tomorrow, but we're talking long term here. And last, probably the easiest and most obvious candidate to get to $1 trillion market cap is Visa. Visa is currently a $430 billion company, so a little more than doubling would bring it up to that $1 trillion level. And I think Visa will get there within the next 5 to 10 years. So Visa and MasterCard essentially have a duopoly on payment processing. Um, People think of Amex and Discover, but those are, in terms of payment volume, are much, much smaller than Visa and MasterCard. And Visa is going to be a long-tailed beneficiary of e-commerce. I mentioned earlier that only 15% of sales are e-commerce. All e-commerce sales, for the most part, are card-based, as opposed to in-person sales, which still have a good deal of cash. That's especially true all in international markets all over the world. So as the cashless trend and e-commerce trend continues, and just as Visa is a natural beneficiary of inflation. If things are costing, say, 10% more, Visa's payment volume should go up by roughly 10%. So Visa's volume should grow over time. Great powerhouse business, and I think it will reach that $1 trillion level. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.